Hi, I'm JC Peretz, and we are here at Chart Summit in Breckenridge, Colorado. I'm with my friend Todd Gordon. Todd, thank you for being here.
Thank you for having me, JC. Great job at this event. Tremendous, first class, the whole way. Definitely come next year.
So Brian Shannon and I are sitting around and being like, man, you know what we should do? We should do skiing during the day, charts at night.
Yeah.
And I'm thinking to myself, obviously, selfishly, I'm in, right? I'm sold. But who can we bring in that has similar passions? And I'm thinking to myself, let's see, Todd Gordon, John Nigerian, like the ski during the day, charts at night. This is right up your alley.
Yeah.
So do you enjoy yourself? Good skiing or what?
100%. You did a great job with a great facility. What is it about skiing and traders, I wonder? To your point, you know, we're kind of aggressive people, maybe independent people.
Well, your presentation yesterday was essentially comparing skiing and trading, right? And the market, being aware, being able to adapt to the environment, right? I love that because, you know, you could be, you know, we're here in Breckenridge, Colorado. I mean, we've had like superb weather since we got here.
It hasn't been under 20, 25 degrees. It's been amazing. And we just came through the polar vortex, minus 20. This feels like beach days, skiing. Couldn't be any better.
Sun's out, you know, fresh powder, right? So it snows while we're sleeping, and then we wake up and it's like fresh powder, sun's out, like it's totally killer.
We gotta go home soon. This is gonna. All right. But you're going to Sonoma. I'm going to upstate New York. I feel like Can I come with you?
You're always welcome, first of all, right? I mean, we are drinking. Todd's like, I'm not doing an interview with you unless you have a drink in your hand.
And this is later in the whole event, so.
Yeah, like
there's the disclaimer.
Yeah, like we weren't drinking whiskey at lunch today, right on the slopes. So, all right. So, listen, Todd.
Yeah.
Todd Gordon is an absolute excellent skier. I'm just trying not to hurt myself, keeping up with him and a couple of the others. Great talent here outside of yourself, right?
As I said, JC and I, we're skiing. I would never want to face one of his fastballs. 85 miles an hour coming at your head or his curveball, no thanks. So mutual respect.
Appreciate that. But like I said, you know, you world-class skier. Others as well, though. There's serious talent who came here, huh?
The quality, the accomplishments that these people have, maybe not so much in the investment realm, but their own respective accomplishments. Such a great group that we've collected here. And to get to Colorado is not that easy.
No.
You know, they were really putting a big effort forth to be here.
Yeah.
I have done more listening than talking here, which when we go to some other events, we're doing more talking.
Yeah.
I'm doing more listening here, and I've learned a lot.
One of the things that we've always been eye to eye on is the value of Fibonacci analysis in the market, right? Every single day. And I look at markets all over the world. India, right? Hong Kong, America. These Fibonacci numbers come into play again and again and again, right? Why do you use it? What value do you find in it?
Well, it's just I love, and JC and I were on the chairlift earlier. We were talking about his trip into Italy, and it was so funny. He went to the Leaning Tower of Pisa, which I guess the Leonardo da Fibonacci's statue is just behind and not very featured in Italy. But the application of Fibonacci to the markets, I don't know if I buy into all the voodoo, the craziness, the very eccentric, what's my word?
Esoteric?
Esoteric, thank you very much. Theories as to why it works. I do think there are some elements of self-fulfilling prophecies. Whether it's truly the natural order of the markets or it's because algos are driving to that point, doesn't matter, it works. I will use it until the point where it stops working.
Yeah.
You know, so Fib is great. The one problem I think I have with people who are new to Fib is traditionally just use the retracements. Use the 38, the 50, the 61% retracement. And when I do presentations,
72, 23, there's like 18 retracements.
There's a lot. And if people are gonna like poo-poo on Fib, and I ask them, how many of you guys are just using retracements? And generally 61.8% of the crowd would say, I only use retracements.
I see what you did there.
You see, so Fib is amazing in that it's not just retracements, it's extensions, it's projections, it's expansions, it's time. I mean, there's all sorts of different ways to apply Fib ratios to the market. And for me, I'm a big LE Wave guy, as you know. LE Wave is a catalog of patterns, right? Head and shoulders, and breakouts, and channels, blah, blah, blah. Fib will give you expected lengths of each leg of those patterns. So, what's my takeaway here? I like to cluster beyond retracements. Use the multiple studies, and when you get a tight zone of agreements, a cluster of support or resistance, I will bet you more times than not the market's going to at least respect it. Maybe it'll sell off a little bit from resistance and it'll go through, and somebody will say, oh, it didn't work. Well, wait a minute, it checked. You know, it's a take profit zone. It's a point of decision. And many times when these clusters of fib come together, the market's going to respond.
You're 150% right, particularly in the clusters.
Yeah.
When there are multiple extensions, so for example, the 2000 peak in the Dow, the 2007 peak in the Dow, the respective extensions from those levels were last year's highs, right? I mean, like, so if you're ignoring those levels, you know, I think it's irresponsible, number one. Number two, to your other point where people are like, oh, it didn't work, right? The fact that prices in many cases break through those Fibonacci levels like they're not even there is information in and of itself of the strength in the market. And then many times that extension level that could have potentially been resistance winds up being support on the way back down.
You know, you're 100% right on that. Like, it's so weird. Levels that should have worked on the way up will often work on the way down. It's weird. And the other thing we should talk about is square roots. Square roots of 0.618 and 1.618 are one of the key fundamentals, one of the key structures of my trading. So if you, on your iPhone, on your calculator, if you do square root of 0.618, and please excuse me, I've lost my voice from talking so much. If you square root 0.618, it's 78.6. If you square root 1.618, it's 1.272. One of my favorite trades is a market that does not hold the 78% retracement. If it doesn't hold there, it's not only going to break the double top, it's going to the 1272. Square roots of the fib, and again, this is way above my pay grade of why square roots work, but they do. And the market, the S&P right now is at the 78% retracement of the SEP, the December drop. If we don't fail here at 2800 to 2820, which was like the whole core of my presentation, we're going to the 1272, which is close to 3000.
So I love your open-mindedness. I think we all agree technical analysis is subjective.
Yeah.
But by the way, every form of analysis is subjective.
Everything is. JC and I've been talking about this all weekend. They say fundamentals are, oh, technicals are too subjective. So I posed a question to JC. Let's bring a fundamental analyst in here. Are interest rates going up a good thing for the economy and stock market, or are they a bad thing? I think we'll get 50 different answers. But anyways, I want to talk more about you. How do we apply fib with your amazing intermarket analysis? Like, what do you use it more for entries, or do you use it for targets to take profits?
You know, I guess really both, because targets, like we talked about before, like extension levels and coming back, like those are entries, right? So really both. It's mostly to identify levels. And then those levels, if we're below those levels, we want to take profits at those levels. If we're above those levels, we want to be buying at those levels, right? So I look at it in both directions. From an intermarket complex, you know, we put our Fibonacci extensions and retracements on ratio. So like we're looking at the consumer discretionary versus consumer staples ratio.
Which you do great work on that. Love that.
We even talk about, you know, the power of Fibonacci. We create our own indexes, you know, custom equally weighted indexes, so we can get information from, you know, let's say the bricks will equally weight the bricks, or equally weight the pigs, or, you know, will whatever. But these are indexes that are not being traded. They're indexes that do not exist. We are creating them, and yet they're stopping at the Fibonacci extension levels. You know,
that's awesome.
I mean, so it's not it's not even from a trading perspective. You know, and you were talking about why.
Goes to the point, like, that would show that it's not so self-fulfilling prophecy. It's
actually, I don't think so.
It is uncovering some natural order structure in the market where, okay, you know, it's human behavior. It's Fibonacci is human behavior. It's a growth ratio. It's understanding how humans on a mass scale evolve and devolve. It's progress and it's regress.
Todd, we see this in weather patterns. We see it in our double helix in our DNA. We see it in the size of our bodies, our fingers. Like, it's all over. And I've just come to terms with the fact that maybe we're just not smart enough as beings to understand why it is that we keep seeing it over and over again. And quite frankly, I don't give a damn.
Yeah, exactly.
We're in the market trying to make money. Who gives a shit why?
Ancient Egyptians said, literally, this is the divine proportion. I mean, this is literally a ratio, a proportion that was given to us by a higher power.
So let me ask you this. There's going to be people watching this video and they're going to be like, look at this Todd and JC guy. They're so full of shit. right? The two of these guys skiing and looking at their charts, right? So for the people who think that the two of us are completely full of it,
Yep.
Any words of wisdom on maybe where they can learn more, what maybe inspired you, that maybe what can maybe inspire them?
You know what's interesting? The collective distrust of things that people don't understand is the reason that we practice our art. Elliott Wave and Fibonacci is a study of human behavior on a mass scale. Human behaviors on the mass scale are not rational. They are reactionary. They're emotional. And when it gets to money, the human instinct comes out. And the very reason that somebody might, let's say, talk down against Elliott or Fib or something you don't understand is the very reason it works, because it's human behavior.
Yeah, my little cousin, when he gets scared and confused, he starts to cry.
Right.
So I understand the others out there, but
You should babysit my 5-year-old twins.
Well, I'll take them on a hike. I'm gonna get them really tired, and then it's time to go to bed. Listen, Todd, you have been killer skier since the beginning. I'm watching your form. I'm like, okay, so look at how he does that. You know what I'm saying? So what do you think? Should we do it again next year or what?
Oh, where? Where are we gonna do it?
You're gonna be part of it?
Oh, dude.
Dude, you're the man. Thank you for coming.
JC, thanks for putting it on.